start doing your research in brokers, because I don't think that prop firms are going to be around for too long. What's good, everybody? Welcome to the Modern Day Trader channel with your boy Marcy and my man named Sam. Sam, what's going on, bro? It's been a while since I've been on one of these. Feels like it's been forever, bro. I'm not gonna lie. Feels like it's been forever. So what's going on? Like, hit me with a young life update over the past 2 weeks. I've been keeping an eye on the channel, and obviously we in touch and we know what's going on. But what's going on, bro? Just a quick overview of the past 2 weeks, just life in general before we touch on trading, and then obviously we can move into the trading for this past week. What's going on, my boy?
Yeah, what's going on? What's going on, bro? What's up, everyone? Yeah, I think it's crazy, bro. It's actually really only been like a week since, because obviously last, you're a bit held up. So, but it feels like it's been like a minute, bro. But I've been good, bro. I've been good. Work's been crazy, but like some good progress there. And I explained to you just some of like our bigger goals outside of trading. That there's progress on that, just with some of the property developments that we do at work. Yeah, as well as some other goals in terms of like the transition into the financial services space that like I'm busy working on. Been progress on that, which is good. I think my studies are going well. Writing at the end of this month, the 27th. Yeah, for those of you who don't know, we haven't maybe watched episode 1. I'm currently studying my level 2 of the Kaya Charter, basically like a private markets designation. Very similar to CFA, but just focuses on alternative investments. So it's been tiring just because like all the gaps are like dedicated to studies, and just been trying to balance obviously studies and work and gym as well, which has been going really well. Gym, I think the past 2 weeks, I've gotten into a really good kind of like cycle or routine at the moment, just trying to stick to like minimum 3 sessions a week, legs, push, pull. And I think it's nice to see the progression of that in terms of just strength coming back, packing on again. With that, having to obviously sort out diet too, because if the diet isn't right, then obviously my energy levels are like just all over the place. Can't get a, and then I then get into like a calorie deficit when I'm not eating enough. So it's been nice to just get back on track and almost just feel balanced across the different areas like all of my life. But it's been busy, it's tiring. Glad I think we've just kept the momentum going with the channel. Bit of up last week from a technical perspective, but we managed to get something out. But I've been good, bro. From trading perspective, I think I've just noticed, because it's obviously month in now. We've wrapped up Feb. Feb was more or less a break-even week. I'll share that in a bit. Very quiet week for me personally. Very quiet month, to be honest. Actually, no, not really. I think the first part of Feb was busier. Couple of trades there. I think 5 or so trades in the first half of the month. Then second half of the month, it's literally 2 trades that I've taken over the past 2 weeks. But I think it's not so much my trading strategy or like my lack of focus in the market. I think the month of Feb has just been a bit more corrective. And yeah, I'll show that in the charts. But yeah, it's been good. Let me just pull up the charts. So as you guys can see, one trade for me this week. It's this pound JPY long. As per the plan, pro trend trade, in terms of in the direction of the high time frame trend out of the 4-hour POI, but the 4-hour POI was also a 2-hour POI. I mean, so I was able to take this on a bit lower time frame. Got a bit of drawdown early on, but managed to get to break even at 1%, and then price ultimately stopped me out at break even. And then went on to actually just shift high time frame structure. So year to date, you guys can see relatively flat. Looking at Feb, you can see 7 trades, slightly down, negative 3R. When I translate that into the actual risk that was taken on each trade, which was 0.25% per trade, it's down about, I think, 0.2, if I'm not mistaken, 0.15, actually 0.15%. So bit of a losing month, but to be honest, in terms of actual account change, relatively break even for the month. Looking at the FTMO account, as you guys can see, same account, all the details there. That's the one trade I took this week, break even, equities at about $9,710 odd dollars. So yeah, because it was break even week, still the same as last week in terms of being down about 2.8% on the account. So yeah, not a lot of movement this past week. And I think it was a frustrating week because the entire week, as much as I was busy at work, there wasn't a lot of movement on the charts. And I found myself being frustrated or feeling a lot of FOMO, as if, I must be missing positions because the past 3 weeks, I've literally only taken 1, maybe 2 trades per week. And in hindsight, when I was busy with my weekly ASR, I just concluded that there was actually no setup. I didn't miss a trade. It was just a quiet week. There might have been certain pockets of volume in the week where we got some movement, but there was no entry as per my plan did happen. So I think it was a bit of a lesson or reminder rather for me in that trading is boring sometimes. It's kind of part of it. There's a lot of time spent sitting on your hands, waiting for the market to come to you, waiting for setups to come to you, and not forcing positions. So in retrospect, glad that I didn't force any positions because anything else taken would have been outside of the plan. And just kind of reminded myself that that's kind of the difference between trading and gambling, at least for that there's not going to be setups every single week. Sometimes it's going to be very quiet months. When I look at it from when I zoom out and look at it, it was practically a break-even month. So yeah, glad that the capital was preserved, the setups that did present themselves were taken, and yeah, let's just see what March has to offer. But yeah, you've been away for 2 weeks or so, my G. 1 week actually.
1 week.
When you edit it for 2 weeks, it's like it feels like 2 weeks.
Yeah.
Seems everyone on tax your end, which is like busy for you professionally. But yeah, what's life been saying on your end? What's the charts been saying? How you been doing, bro?
You know what? Every day this week, every day felt like a full week this week, bro. Like Monday felt like a full week. Tuesday felt like a full week, bro. It was hot. Tax season is something that I started questioning. I was like, why would people even want to do this like for so long, bro? Like, if there's no passion, there's no way you're doing this and remaining happy. Just because Feb just doesn't make sense as an accountant. What? I was telling myself after this, I'm straight into private sector, bro. I'm out of like accounting firms. I'm out of this bitch, bro. I'm moving so quickly, my boy. So yeah, but with regards to just life in general, I feel like over the past week, I was on autopilot. I'm not going to lie, bro. I was pretty much on autopilot. And I think my autopilot is relatively decent in terms of like my habits. Like I'll still wake up early. Obviously wake up early. I started incorporating doing my logbook in the mornings now. So when I leave to work early, do my logbook, that's starting to grow to roughly 33%. So I'm on course to hit my goal for the end of Q1, which is 39 to 40%, on course to that. And then just leave work, go to gym, and then come back and check the charts, bro. That was my autopilot this week, bro. I didn't read, I didn't listen to too much podcasts. I didn't do none of those, but like I feel like my autopilot, although it didn't consist of really taking in too much new information, which I do think I need to start incorporating. So if I do go into autopilot at any busy stage again, at least I know I get some new information into my like into my thought processes and my day-to-day thought processes. So I was just thinking like this autopilot thing is not the best. Like I don't get me twisted. I don't want to live like this, but like can at least say that when I do go into a busy time that I know like my top 2-3 goals are still getting achieved regardless. I'm still working on my trading. I'm still working on my career, and I'm still doing like my gym, and I went super consistently this week, regardless of how busy it was. I was in the gym 4 times. I just need to do legs this morning after this, and then my week's done. So I still hit all of those, and all I need to do really is read over this weekend and then listen to a podcast, and I'm good and I'm chilling. Getting into the trading, I think, as you mentioned, it's been a slow week. I think we were on the review part last week or the week before last actually, and that was the week which wasn't the best, and I think I was sitting on -9 on the one account, and then I was sitting on -7 on the other account, on the 10K account, and it was I don't know, mentally draining. But then I think going into last week, I started the week off. Let me actually jump into the charts, guys. Let me share my screen and jump into my. So I'm actually up 2 odd. I've taken 9 trades over the past 2 weeks. Majority of it being last week, just because this week was so slow. I think I took 2 trades this week, 2 odd and then a -1 odd. I'll jump into that in a bit. But last week was pretty decent in the sense of I took 3 winning trades, and then I took 3 losing trades, which essentially meant I was at break even on Thursday, and then I took a win on Friday. But hey, the name of the game means there's commissions, there's spread cost, and all of those things. And what would we be without transparency? And I can't hide any lessons. I'm not going to say failures, any lessons from the channel, just because I feel like that's what the modern day trader channel is built on. And essentially what I'm supposed to do is I was supposed to be up by 2% on the 5K account last week. However, due to commissions and everything, this thing it capitulated. When I went back down to break even, it was over, bro. I don't understand. And I was taking the same 1% trades. And I don't know if you guys can see this. I'll get into this in a minute, and I want to ask Sam a question with regards to this. But yeah, bro. So this account is basically breached, bro. Like, it's over. And I knew, like, the good thing is my initial plan with this account was to be a bit more aggressive. And I realized I wasn't necessarily too aggressive with the 1%, just because it took me over a month to fail the challenge. The initial plan was that in the first 2 weeks or like a week or two, I should either have passed the challenge or I should either have failed the challenge. And so, like, looking at my aggressive nature, I don't think it was like as aggressive as I wanted it to be. But we rode out the wave, and we rode out the whole ups and downs. And this is how it looked. With the 10K account, we are currently sitting at -6%. So as I mentioned 2 weeks ago when I was on and I showed you guys the -7%, we were actually at -7% here. And then the 2% is basically 0.5% each, meaning now we're at -6%. And yeah, that's my trading journals or my dashboards. I just want to jump into the one trade that I took this week. Actually, let me show you guys both. So this was the first trade that I took. It was pretty simple. We had the daily being bullish, we had the 4H being bullish, and we had 4H correlation. And then from there, what I just waited for was the break and close above an area, shifting structure back bullish on the 15-minute. And once the bullish structure shifted, I jumped down onto the 1 minute and I entered above higher highs on the 1 minute, and my stop loss went below the most recent higher low. And all I'm anticipating is that once market the market pushes into pre-London, which is around 9, 10, pre-London, sorry, and in London Open, we should then experience the London volume, and quite clearly the London volume pushed in and we started pushing to the upside and we got the win. The second trade was exactly the same. We had the daily being bullish, we had the 4H being bullish. From a 15-minute perspective, we broke above and we closed above. And I don't know, for some reason, I was anticipating that this could be a fake out to the upside or liquidity grab, as smart money concepts would call it. However, I just took the trade according to the plan. And I think there is something that I can implement, because I do think, as I mentioned, and as we mentioned, that trading is not just fully systematical. I don't think it can be fully systematical. I think there's a lot of discretion involved. And initially I was telling myself, wait for, if price is going to push up first in the next 15 minutes, you're going to see a clean push to the upside on the 1 minute and just wait for the pullback. However, I didn't do that. I just set my buy stop and I told myself in the next 20, I can start implementing that rule essentially and start including it as a full-on rule, that when I do anticipate that there was a Asian range, because I do know when there's an Asian range, that there's a high chance that even if we have the higher time frame facing bullish or facing bearish, that if we break to the one side first, there's a high chance that we might break back into the Asian range again, and then that essentially acting as a liquidity grab or fake out, whatever you want to call it, whatever terms you want to call it in terms of trading. But yeah, that's something that I'm going to implement. And then also, I think I mentioned, Sam, last time we were on a call, I mentioned that there is a high chance that I'm going to take trading when there's news out. And that's definitely going to happen. So that big 7% fall, I don't think it's going to happen again. I know it means I'm going to be restricted to possibly like 2 weeks of trading, 2.5 weeks of trading in the month, just because I'm not going to trade a 4H when there's actual news got to do with the pair. Whenever there's pound news or yen news within that 4H, I'm not going to trade that 4H candle at all. Now, I understand that might mean that I'm going to trade less, but based on my results, if I'm not getting the best results in those times, all the time, like there was 2 losing streaks that happened, and both of those related to very news-heavy events in the week, I feel like I should just take it out, and I feel like I'm basing it all from the numbers. And so, yeah, I think there is something that I wanted to ask you, Sam. Before we jump into the charts, just something quickly. I don't know if you saw that little pop up on my dashboard there. So obviously I'm a skilled funded trader, and on Thursday I tried taking a trade, and I couldn't take a trade. It said invalid on my MT5. And then I went over to the dashboard and I saw they migrating servers from these 3 brokers that they initially had to, I think it's called DFX. I'm not too sure, but to some other broker, so that it's easier for US traders to basically jump on board. Now, you know, Sam, hey, bro, I've been in this prop firm space for a minute. I've seen funding talent come and go, bro, fall under the wagon, bro. Like, hey, I think I passed my challenge. I was on the verification, and then they just tumbled, bro. They tumbled. Then my Forex funds came. They went too. Like, hey, bro, like the wind, bro. Fucking flash and shit. So now we have skilled funded trader, and I can see this movement. And I was speaking to one of my mates, and he was saying it's kind of reminiscent of all these other firms, bro. Like, why they're changing brokers and why they're doing this and why they're doing that. And so my question, obviously you with FTMO, which is one of the well-known firms and one of the long-standing firms. But even with FTMO, there's a lot of questions being raised now with the fact that they throw in sales, which they never did in the first 5 years. I'm not too sure if you saw that. The first 5 years of trading, they never ever threw sales. There was never a 10% sale. There was never a 20% sale. When funding talent was around, they were paying people out. Then you had all of these firms that were popping up that started booming, bro. FTMO still never threw a sale. So now I saw on the 29th of Feb, FTMO threw another sale. Last year in December, they threw a sale. And I think me always questioning things, I wanted to ask you this question. Where do you think the prop firm space is going to, bro? And like, do you trust the fact that it's going to stay around for a while? Because the way I see things going, I'm kind of going against the grain, and I'm starting to believe that it might not be there for too long anymore, bro. Like, it might not be there for as long as we thought it's gonna be there. So, yeah, what do you think, bro? How do you think this is gonna go, and where it's going to?
Yeah, it's a fair question, bro, because I think anyone who's spent enough time in the prop firm space has like experienced it to some extent. And I was in my Forex funds when things kind of went belly up. So kind of experienced that. I think it was at the point where they had recently just extended their time frames, and I hadn't passed phase one, but I was on my way to passing phase one. I think I was up like 3 odd or 4%. So in like a really good like run, and that happened. So from a regulatory point of view, I'm not too sure. Like, obviously you hear things and, something about, I don't know, they weren't licensed to offer those services for like US and Canadian based clients or something like that. But it kind of threw me off. And I think from that point, there hasn't really ever been a full trust with the prop firm space, which is why I think I just gravitated towards FTMO, because they are the biggest and like most established prop firm in the space. Obviously with skilled funded, it's I think Paladin and Riz and a whole bunch of other like very experienced retail traders that like there's a lot of content about them, and they have a good track record and good intentions. So there's that like elements of trust. But I don't know. It's obviously a new venture for them as well. So while they may mean well, I don't know. I didn't fully trust like that they navigate, or that they have experience in navigating like the regulatory side of like the prop firm like space. Hence, I kind of just leaned towards FTMO, even though they are more expensive. So can't say too much why they started offering sales, but I think there was a large part of the market that became available to other players when my Forex funds went under, and it might have been a marketing play to grab that portion of the market. I think other prop firms are experiencing difficulties over that period, so that's maybe why they may be doing it again, because they are expensive. It's like a 5K or 10K account you can get on FTMO, you can get like a 50K or 100K on somewhere else. So I don't know if that's the play. I really can't say, bro. But for me personally, prop funds are just one channel of trading, larger capital. And I think at the moment, it's just the channel that I'm exploring. It's the most cost effective for me, and I'm gonna ride it while I can, but keeping in the back of my mind that this isn't a long term thing. I can't look at it from a 5-year perspective and say that in 5 years I still want to be trading prop firm capital and have majority of my capital in a prop firm, because anything can happen at any point. I think the onus is also on me to understand whether the prop firm I've chosen does adhere to whatever conditions are imposed on them from a regulatory perspective. Because if I don't, then if they go belly up, then that's my fault. If
Exactly.
they go belly up because they weren't adhering to regulation, then can't blame them, because I didn't also do my due diligence on the prop firm. So I don't think you can really blame any of them when they do go up and your funds get lost, and you consent to keeping your capital on their platform.
Exactly.
When you go through the process. So it does play in the back of my mind, and once I get through the stage of passing the prop firm challenge and then trying to consistently withdraw, I'm going to think a lot harder around what my sort of withdrawal strategy is and how I want to manage the funds that I do withdraw, to then start setting up my own personal capital, as well as then once there is that established track record of withdrawing, I think starting to establish a network of other private investors that can gain more capital from, where it's maybe on a more secure basis, or it's an arrangement, that I've done outside of the prop firm, where, the terms are clearly understood, and, there isn't that risk of the regulatory risk essentially that we face with prop firms. So that's kind of the short answer, because I know you stuck that question in there where it's not your Q&A week. Sorry. I think it's something for anyone who's in the prop firm space to think about, because it's a risk. And FTMO are the biggest, but to be honest, I don't know what their policies are. I don't know whether they are adhering to regulations. I'll be fully open and honest with that. I haven't done my due diligence from that perspective. But I've just sort of prepared myself to say, if things do go up, upside down, then know that that's a risk you're willing to take, short term at least. But long term, when I am starting to withdraw a lot more consistently, I need to have a contingency plan for that, because you could literally set up a life around that's very dependent on this prop firm, which I think a lot of traders do, and you don't plan for when things like this happen, when your microx funds go under, when your FTMO eventually maybe goes under. So yeah, that's
exactly. Nah, shout out, bro. Shout out. I just think now, just to give a 30-second answer, I think that a lot of people need to start saving their own money and looking to, along with your challenge, look to deposit in a broker. Start doing your research in brokers, because I don't think that prop firms are going to be around for too long. That's my personal opinion. Now, I do think, as Sam mentioned, it is a channel that you can use to up your own personal funds in your own account. But I do think along with that, you need to start treating your personal trading account as a small savings account, where you can dollar cost average into it every month, a small amount, whether it be $30, $50, whatever the case may be, that suits your budget. But that's what I think that should start happening now. And just for safety purposes, when things do go under, as Sam mentioned, it's not the prop firm's fault, it's our fault that we didn't do enough research. But at least you fall on level ground and you have your own personal account to fall back on, and you can continue trading. So yeah, let's jump into the charts, Sam.
I think before we jump into the analysis, bro, I want to switch things up a little. I know we normally like asking the Q&A question when the Q&A starts, so that it gives a more like real-time like answer. But I think I want to ask it now, because it's more of a technical question than a psychological question. And I think as we like go through the charts quickly, it will like allow you just to give a better answer when we do get to the Q&A section. So I'll ask it now, but I'll re-ask it again when we get to the Q&A section. But basically, it's a two-parter. Like, the question has two parts to it. And that the first one is, what elements do you think every trader needs in their plan? And how does each element contribute to the effectiveness of the plan? And the second part is, why is discretion needed, when you have a plan that may be very mechanical? So I'll ask a very high level, and when we get to the Q&A, I'll ask it again, but I'll maybe break it down like a little more. But those are essentially the two parts of the question. What elements do you think every trader needs in their plan, and how does each element contribute to the effectiveness of the plan in whole? And the second part is, you have a plan, it's like very mechanical in the steps you need to take and follow, but why do you need discretion when you have a very mechanical plan? So, well, we'll put that on pause. The subconscious can get to work. Just jump into the charts. So I think, like I'd said, like we had both said in the review, there hasn't been a lot of movement. Dollar index
just looking at this week from Monday, we've practically closed where we opened, which is a very neutral week from a daily perspective. I think the predominant trend is still to the upside. We are at this high value area. Initially, I thought we were breaking high when we got this impulsive move, but we've closed back below and are now trading below that daily high value area again, tested it almost, and I think potentially heading a bit lower to these areas. I'll still be bullish on the main predominant trend until we start trading, below that this daily high value area here. I do think though that in the coming days or weeks, price is going to start to correct a bit lower. Jumping to the 4 hour. 4 hour structure has shifted. Same structure as last week. Nothing's changed. But I remember last week we didn't really go into it. But yeah, as you guys can see, price has been very range bound. I do see us sort of forming this type of continuation pattern. We haven't yet mitigated the 4 hour POI. And so there's a potential that we will come up and do see dollar index being more corrective this week. I think the fact that we are trickling lower with a lot of low momentum and we aren't very impulsive sort of indicates that it is more of a correction than the predominant move. But whether that's the case or not, I still do have that daily level where will almost be a mechanical point at where if we break that, then the bias shifts from bullish to bearish. I think looking at that bearish on dollar index for the coming week just kind of informs the bias on all other pairs. Starting with EU, very similar. Only difference is EU's kind of push away from this high value area. I think a lot clearer than dollar index. Dollar index is kind of hovering around there, but we tapped into the area. We've closed low on the daily, and then we came up and broke structure, not with great momentum, but we've stayed above, at least this protected low and haven't broken back below, and have transitioned almost into a much more corrective phase, just going down into the 4 hour. You can see again, very sideways. What's nice though, I think with EU, which is the pair that we do trade, it's the bullish structures. The 4 hour structure, I mean, is bullish and it's holding. And while we are correcting, at least we're correcting with some sort of structure, which obviously then provides opportunity to take longs out of this area to the upside, up into those equal highs. So that's what I've been looking at. I was trying to identify a few entry opportunities for EU this past week, but didn't really get any. Just because of certain criteria I look at on the micro time frame, my lower time frames. But 4 hour structure is holding. I'm looking for longs, ideally price coming back into this region. I just need a run of liquidity of this level, and then on those micro time frames, look to take price up all the way to those equal highs. So what I'm seeing in terms of dollar EU is the high time frame trends, dollar bullish, EU still very much bearish. As you can see, I don't think from a high time frame perspective this is bullish yet. I think we're getting a reaction off here that may lead into a high time frame structural shift. But because the lower time frames, well, not lower time frames, but I guess the 4 hour daily are more corrective, as much as the 4 hour structures can be countered to that high time frame or daily bias. I see it more as just a deeper correction than a shift of the daily bias. So yeah, I'll be looking to play that deeper correction, just with I think a bit more discretion and confirmation use, because I know it's not an impulsive environment. We may get a lot more fake outs, liquidity grabs, retests of areas, like you can see on EU. We came into the area a lot a long time ago, but it's taken a while. We haven't even pushed off properly yet. I think we're continuously testing the area before we come up, and that's something we see in these drawn out sort of corrective periods. Moving on to US30, against all odds, still bullish. This thing is really defying odds. It shifts structure and then just shifts back bullish. But again, trading at extreme highs, still bullish on the daily. But as you can see over this past week, very low momentum. This was the open on Monday. We've literally closed at that exact same point. So very neutral from that in terms of being impulsive or corrective. Very neutral, very corrective. We kind of just went sideways this week. 4-hour structure is still bullish. I'm looking for price to retrace into this 4-hour structure before identifying any positions. I think I said, last week in my analysis, what I was looking at when price was still up here was that for me to risk capital at this point in price, so where we're in price discovery mode zone, we're at the top of structure. We do have a 4-hour structure that we pull back into. I'm not looking at these lower time frame continuations. I'm looking for more certainty when price is trading at a point at which it's due a deeper correction. So I'll still be trading in alignment with that daily bias, but conscious that I want to take it out of higher probability areas, which are the 4-hour. So waiting for that to come down into here, drop down to lower time frames and micro time frames for entry confirmation, and then we can potentially get some longs on US30. USDZAR, from a daily perspective, still very much sideways, neutral. We had a bit of momentum last week. That's this week just being followed by a lot more corrective price action. From a 4-hour though, we are still holding in terms of sticking to the bullish structure that's kind of been forming and mitigating and reaching equal highs. So it's moving higher, but it's moving higher very correctively. And I think similarly to US30, not looking to take lower time frame valid setups, focusing more on price correcting into these high time frame zones. I think because daily price action is a lot more corrective, we tend to see these drawn out pullbacks a lot more. But once we get into this area, then switch and become a lot more aggressive. Wait for the entry criteria to be met, and then target those equal highs. So a bit of a waiting game on USDZAR as well, but bullish from a 4-hour perspective. And then GJ, I think, is the only pair where, from a high time frame perspective, correcting, but still correcting with momentum. I think we saw a shift to the downside this week. There was still, stalled a bit at these highs here. Nothing much to the left yet. I think if you go up to the weekly or the monthly, there is still a bit of room for price to trade higher, and we are still predominantly bullish on this. Again, I think seeing a deeper correction down into the 4-hour, we've shifted 4-hour structure, so just confirmation of at least from intraday or from a weekly forecast perspective, I'm looking for price to head lower, even though the daily is bullish. But I like that we have shifted on the 4-hour, and it just gives some credibility to that pullback. So we'll be bullish again until price, unless price breaches this daily high value area, and we'll look to take advantage of these moves to the downside into that area. So currently have 4-hour structure, looking on the lower time frames for price to reach this current 4-hour structure, and then obviously drop down to the micro time frames, entry criteria, and take that lower. If we don't get there, I'll just move to the next structure. So I think just when I sum it up and look at it, a lot of the pairs are in these deeper corrective cycles. hence the lack, I think, of activity over the past couple of weeks. And a bit more patience is just required. It's not an exciting, I think, part of I guess, trading, but it's just waiting for the setups to come to you, recognizing that the environment has changed. Still looking for the same thing, but as you can see, I'm sticking more to the 4 hour, the daily, waiting for price to get into zones and give me confirmation from those zones where there's a high probability of setup playing out. So yeah, just to sum it up, maybe. And again, the flags indicate the higher time frame bias, which is bullish dollar index, but I'm bearish short term as price corrects. Bearish Euro USD, but bullish short term. Bullish US30, so bullish on the lower time frame. USDZAR very corrective, but on the lower time frame, bullish. And then pound JPY still very much bullish, but looking for I'm bearish on those lower time frames. So yeah, what are you seeing, bro? How's it looking on your end?
I think there might actually be some differences this week, Sam.
Love it.
Yeah,
Love it.
but let's jump straight into the charts and we'll see exactly where those. From a high time frame perspective, as Sam mentioned, I think to me personally, this is bullish. You can see from a weekly perspective, we broke above these highs that made this recent low, and then we formed this higher high, pulling back to form this potential higher low. And I am anticipating from a higher time frame perspective, from a weekly perspective, that we are going to potentially push to form these higher highs above these 107 regions. But then jumping down into lower time frames, I think it's a bit tricky because the daily just broke bearish. And the reason why I say that is because this was the last daily lower high. We had the push to the upside, we had a clean pullback, multiple days, and then we had a push to the upside that formed this higher high. And you can quite clearly see that price action had now shifted bearish and we broke structure. But are we really bearish? That's very questionable. To me, the reason why I'm saying that is because usually this is signs of bearish pressure. It's not necessarily that we fully bearish. It's signs of potential bearish pressure to come. And I do think if you go back down to the weekly or back up to the weekly, what you could potentially see is that price action could pull back and fill these imbalances up here or down here, sorry. Pull back, fill these imbalances to then see a potential push to the upside. Now, do I see it coming all the way down there? I don't think so, just because I do think it's quite a bit to ask, but I do see a bit of a pullback from a weekly perspective. I see price action slowing down around these areas. Now you can see this is 4 weeks of essentially consolidation from a weekly perspective. And that 4 weeks is a full month. So as Sam mentioned, Feb has been pretty range bound. And for me, this usually after a big push shows that we could potentially see a little bit of a pullback before a continuation, because that's what I'm expecting from a structural perspective. Now, jumping down into the 4H, this to me showed that price action clearly broke structure. We formed these lows right here. But now, to me, in order for me to have that bearish pressure come in that I'm anticipating. Now, overall, the high time frame is bullish to me. But in order for me to see the pullbacks that I'm anticipating on the weekly time frame, I'm going to need a new lower low to be formed on the 4H. And once that lower low is formed, now I have a bearish trend, and I'm anticipating the price action could then continue pushing to the downside. Now, I think I don't know where price action is going to push until, but that's just the nature of trading. You don't know where price is going to bounce from. You can just anticipate that price action could potentially have these levels that we could bounce from, these areas, or even these areas down here. You can have the anticipation that it could potentially bounce from there, but it doesn't necessarily mean that it has to. All I know is that if price action makes these lower lows from a 4H perspective, that then means that this area right here becomes my new lower high, and I can start anticipating trades from these areas to take it to the downside. Now, alternatively, as I mentioned, the higher time frame is bullish already. What I can potentially see is if price action breaks above these highs again, I'm fully fledged bullish, and I'm just looking for buys from a dollar perspective. Now, as you guys know, we don't trade DXY. we do our ever trade EU. And if you're going to use this information on EU, looking at it from a 4H perspective, as Sam mentioned, we're pretty bullish on this pair. We had the higher high break in these recent higher lower highs, pardon, that formed a new higher low, and we formed a higher high. So to me, this is already in an uptrend, and this kind of confirms that it could potentially be that bearish pressure from DXY. So I'm anticipating that we could see, and I think this is where we actually agree, Sam, that we could see this potential push to the upside and then a continuation to the upside. That's what I'm anticipating. Now, whilst I am anticipating this, I do understand that this could be a 1 week thing or even a multiple day thing, but I don't think it's a long term thing. Just because from a higher time frame perspective, if you're looking at this from a daily perspective, you can see that we shifted structure to the downside right here. And that means that this point up here is where price action would then need to shift and break above and close above in order for us to then be bullish again. So that's my anticipation. I'm anticipating short-term pushes to the upside with a pullback, and then in the continuation or the anticipation of the continuation to enter in those buys. Similarly with DXY, anticipating the price action is going to push to the downside. Jumping into pound yen. I think, as Sam mentioned, uh, I think this to me is one of the most cleanest pairs, because if you anticipate in structure, I'm not anticipating a range at all. All I'm doing right now is, you can see that from a weekly perspective, is we had these higher highs, higher lows into a point of interest, and then we formed a higher high. And this was quite clean movement in terms of the weeks pushing to the upside. We had this higher highs that formed this higher lows that then in turn formed the new higher highs. So all I'm doing in terms of structural anticipation is anticipating a new higher low to then form a new higher high. And I think all we can do is really anticipate structure. That's really all we can do. And with that in mind, if you jump down to the daily, now the daily is still bullish, but I do think that this is the exact same level that Sam marked. I am anticipating that because the 4H has switched structure, broke bearish, and also we had a new lower low forming, which I'm going to show you guys now. I'm fully anticipating that we can meet these areas here this week. Now, whether we break daily structure or not, which I am anticipating, we don't have to, though. I'm anticipating that we could potentially break daily structure because of the way the weekly has looked. The weekly has formed a higher high. So now after a higher high is formed, there's a huge chance, or there's a higher chance, that we're going to form a higher low to then go higher high again. And keeping that in mind, when we jump down to the 4H, I think this is going to be a very clean trade. Although we essentially counter trend trading, I think from a 4H perspective, we will be trend trading. And I think that's where time frame correlation comes in, and understanding that from a higher time frame perspective, that we're going to form a higher low. So now what you can do from a 4H perspective is just trade it to the downside. So that's all I'm going to be doing, is I'm going to be looking for these sells and these continuations to the downside. And what you can see is that we already achieved equilibrium on this push we had a big impulsive push, we pulled back. This is higher than 50% already in the pullback. Now there is this point of interest that we could potentially pull back to, but we don't have to. And I think a high thing going into, or a good thing going into next week, would be to look at the lower time frames and see if price action has shifted bearish on the 1H or on the 30 minute, and then anticipate the price action could fill these daily areas that are pointed out. And I think Sam pointed out too. And I think GJ is going to be a really good pair moving early into next week. Let's jump into USDZAR. I don't think this pair is really like too tradable, just because the higher time frame is in a range. So I wouldn't advise trading this pair. However, from a 4H perspective, we are forming higher highs, higher lows, and we live in imbalances. If you're gonna, if you're just gonna look at the 4H zoomed in from a 4H perspective alone, then I think you can trade it, or anticipating buys. But I wouldn't personally trade it, just because of the higher time frame areas that we are in. We really form, like, we in this range, and it's just pretty dirty in my opinion. There's multiple other pairs where you can anticipate where price action could potentially go to, and try to find entries in those directions. With this, I'm anticipating bullish pushes, but do I really want to be in those bullish impulsive moves? I don't think so. Just because of the way price action has been moving. Jumping into US30, as Sam mentioned, from a forage perspective, this pair shift structure bearish and then it just continues bullish again. And I feel like if you trade in this pair, it's just buy, bro. I don't know, buy until you buy with a decent stop loss below structures and until price action completely changes and like just fully annihilates structure moving bearish, just continue buying. Like I think that's the best thing. I don't know where you're gonna place your stop losses because clearly we have these liquidity runs below structures. Maybe if you use previous structures, that would then make sense. But then at the end of the day, you cutting into your history hoard when you do that. But essentially, this thing's just bullish. And yeah, all I can do is anticipate buys. How would I enter this? I'm not too sure, but yeah, I'm bullish on this pair and bullish on DXY, and I'm very bearish on EU. But I understand that price action moves in impulses and corrections. And so, in order to anticipate those corrections, you're basically going to anticipate an impulse on lower time frames and
Sure.
essentially just be trading in those directions. So yeah, I agree with you. All of the pairs basically. Just I wouldn't touch USDZAR. I would not touch USDZAR with a 10-foot pole
Fair,
at all, bro.
fair comment. Fair comment. All right. No, no, I think it's a bit of a tricky week, but like I was saying, just I think a bit more patience required. Um, not to force positions, like not to look too hard for them. But also a week where there is opportunity, especially I think on GJ, which is trading quite nicely. Break down on a week to week basis. Drop it in the comments, and we can add that onto the analysis section. So I think let's jump into the Q&A, bro, to end it off. So yeah, I did ask the question at first, but I'll ask it again. So it's two-parter, more technical question. First part is, what elements do you think every trader needs in their plan, and how does each element contribute to the effectiveness of the plan? Because, for example, um, uh, chart patterns is a strategy or a sort of method of like trading, and you can have two traders both been trading for 2 years. They both look at the same chart patterns, the same bullish flags and bearish flags, um, but they can both have two very different results. And I think part of that can be attributed to like how they approach the markets or how their plan almost guides them into executing a trade, managing a trade, or whatever. So, how does each sort of component of your trading plan sort of like contribute to how effective like your plan performs? Basically, that's the second part of the first question. But the first one is, what are the components that each plan needs?
Okay, so the first part, elements. What elements should you have in your plan? And I think uh I'm gonna speak to my plan, and that's all I can do. So the elements that I have, I think when you get to elements, you need to, or each thing that you break your plan up into, you need to be able to essentially have everything in front of you that you're trading. So the elements that I'd say, just to go straight into it, I made a list. So you need to know what your approach is. Firstly, a detailed approach, and you need to be able to essentially break each thing down so that if you explain, and this is the way I approach to my plan. Uh, if you explain it to a 5-year-old or a 6-year-old who knows the basics of trading, they should be able to understand exactly what your approach is in trading, and that's how detailed it need to be. There shouldn't be any holes in you explaining your approach to yourself in your trading plan. And I also think the first thing that you need to do when you get to making a trading plan is essentially approach it as a business plan and understand that trading is not just a random or just a hobby, bro. Like it's a business, and you need to be able to approach it in that way and in that manner. So when you approach this plan that you're going to make, you need to understand that you're making this plan, and yes, there's going to be adjustments along the way to the approach or to certain sections of your plan, but you're making this plan as in depth and as detailed as possible so that you can have a way forward. And this is going to be essentially your roadmap forward. So number one would be, what is your approach as detailed as possible? If you trade in patterns, you need to be able to know which patterns you trade in, when you trade in them. All of that needs to go under what is your approach. Then the second question that I'd ask myself is, what is my goals with this particular plan? Like, what do I want to achieve? And the reason why you need to ask this question is so that you can start to measure what you want to do and are you doing it. So then when you have a quarterly review or mid-year review, you can go back to your trading plan that consists of your goals, and you can ask yourself, is this approach that I have, which is question number one, meeting the goals that I have, which is question number two? Now, your goals need to be realistic. It needs to take into account where you are as a trader. It needs to take into account what you want to do in the next 6 months, year, 2 years. It needs to take into account everything. What do you want to do? Do you want to do a challenge? Do you want to deposit $5,000 into a broker and start trading that? You need to take into account all of those factors. Then number three is, what pairs do you trade in this plan? Now, this should be stated in your approach, but you want to put it separately, so then your mind can internalize what pairs you're actually trading and what pairs you are actually executing on. So you want to know that if you're only trading, like in my case, I'm only trading pound yen, I'm putting it as under that heading as, what am I trading? What's the pairs that I'm trading on? Then another heading or another element would be, what are the other pairs that you're using in your trading plan? Like, for instance, with Sam's trading plan and the pairs that we analyze DXY. That's a pair that's an additive to the plan, but we don't actually execute on that pair. So you want to now it's time to look at the time frames that you're trading. Are you a higher time frame trader? Are you a lower time frame trader? What type of trader are you? Are you an intraday trader, swing trader, or a long-term trader? If you fall into any one of those categories, what you want to do is you essentially want to look at or put into your plan each time frame that you're going to be looking at. So in my case, I look at the daily, I look at the 4H, I look at the 15-minute, and my entry time frame is the 1 minute. I want to add every single time frame that I'm looking at onto my trading plan. If you're looking at the weekly, then you're looking at the daily, and you're entering on the 4H, you want to add all of those things, and in brackets or in whatever the case may be, you want to add what your bias time frame is, what your confirmation or what your evidence time frame is, and what your confirmation time frame is, or entry time frame essentially. Thereafter, what you want to look at is, what setups do you trade? Name your setups. And the reason why I'm saying is name your setups, so that you can, if you have multiple setups, which most people do, if you have 2-3 setups, you have a conservative entry and you have a refined entry, what you want to do is you want to name them, so then essentially when you get to the journaling part of things, you can start to keep track of what is working for you and what is not, because the refined entry might be a bit better than the conservative entry. Now, you might be getting more trades on the conservative entry, but if the refined entry is working, why not just do that? Or if I'm trading breakouts, but I'm also trading out of the point of interest, if the point of interest time frame or entry is not working, why not just trade the breakout entry? Now, that takes time to go over, but I think it's very important to name your setups, have them in your trading plan, have pictures of your setups in your trading plan. Going on to the next thing, what times do you trade? Now, this is kind of this goes in line with what type of trader are you. If you're intraday time frame or intraday trader, and you're looking at your time frames that you're looking at, for instance, if you're 4H, your 1H, and you're entering on the 15-minute. If you're a scalper and you're looking at the 1H, the 15-minute, and the 1 minute, what you're going to then be doing is you're going to be having certain time frames to trade. And more likely than not, if you're a day trader or intraday trader, what you want to do is you want to keep your times that you trade into a certain limit, so then it's easily to have controls that you can change. If you trade in London session and New York session, you'll be able to essentially journal them both and have numbers for both of them, and then eliminate the one that's not doing the best for the one that's doing the best. Now, if you're a swing trader and you're trading at any time of the day, whenever your setup actually applies to you, what you want to do is you want to start to time where your best setups actually occur, where and when. So if it occurs in London session, for instance, or if it occurs in Asian session, you want to be able to quantify those things and have those things in your plan. Now, you can say, I don't really have a trading time, I trade any time of the day. Okay, it's perfectly fine. But in your journaling, you want to add a section that takes into account the actual time that you enter the trade. So then over time, when you have taken enough trades, you can then see what time frames work best for you in terms of the actual time of the day, and then you can add that to your plan. And then moving on to the next thing, what are your entry rules? You want to place every single entry rule that you have in your plan. If it's a breakout, you're waiting for a 15-minute breakout, and then you're going to scale down to the 1 minute time frame. You're going to be looking at the 1 minute structure, and once price action in the 1 minute structure starts flipping in your direction that you have as your bias, are you going to enter with a buy stop? Are you going to enter with a market execution? What are you doing? Are you entering as a breakout on the 1 minute, or are you entering out to the point of interest on the 1 minute? All those entry rules that you want to have that in place. Then the next step would be break even rules. Where are you going to go break even? Are you going to go break even at 1 to 1, meaning whatever you risk, you up by? Are you going to go break even where the nearest structural point is? On what time frame are you going to do that? You want to have all of those rules in place in terms of your break even. The next thing would be your stop loss rules. Where are you going to place your stop loss? Are you going to have a standard 10 pip stop loss? You're going to have a standard 20 pip stop loss? Are you going to be using structure as your stop loss? What are you going to be doing? Then the next thing is, are you going to have your TP rules, your take profit or your exit rules? What are you going to have? Are you going to have structure as your TP? Are you going to have higher time frame structure as your TP? Are you going to have a standard 1 to 3, a standard 1 to 2? All of those things need to be taken into account and placed into your trading plan. The next thing would be risk management rules. Now, I do think this is it's a very important part of your plan. If you're doing a challenge, it's going to vary to whether you trade in your own account. If you trade in a high risk account, you need to be able to have that in your plan. If you trade in a low risk account with more money, you need to be able to have that in your plan and have every single risk management approach for each account in your plan. And then from there, so that first 10, 12 questions answers what you're going to do and what your approach is. From there, now what you're going to do is you're going to be having things in your plan, such as things to do when you win and things to do when you lose. And this is simply asking yourself questions in the market. Why was this trade a winner? Why was this trade a loser? What could I have done to avoid this loser, or what could I have done to make this winner better? And those types of things you need to add to your plan, so then you consistently getting better at what you're doing with this plan and consistently adding value to the plan. The next thing that you want to look at is in your plan is have a pre-market routine. And the reason why I'm saying add this to your plan is because it's very important to keep things consistent. And I feel like people undermine what consistency can do to your trading. And if you have the same routine in the morning leading up to the charts, doesn't matter whether it's a winner or loser, what you can know is that you're eliminating the element of emotion before you get to the charts, in the sense of, you know, that you've done everything that you do on a normal day-to-day basis, and you get into the charts, you calm, you've done everything. When you take in the trade, you don't have to take into account too much journaling of emotions, because you've done what is in your pre-market routine. Now, if you've taken a step out of your pre-market routine on any particular day, I'd say step away from the charts and go ahead and trade. And that's the importance of having a pre-market routine in your trading plan and follow it step by step. The next thing would be have a post-market routine. What are you going to do? Are you going to click chart patterns? Firstly, you're going to make sure you journal your trade post whenever your session is. Journal your trade. Ask yourself, how did you do in this trade? Was the winner? Was the loser? Why was the winner? Why was the loser? And then what do you do after that to calm yourself down? Then lastly, Sam, the tools that you use in your trading business. And the reason why I'm saying the tools that you use, because I feel like most people, they're on autopilot when it comes to this. They know they need to do open MT5, or they need to open trading view, do their analysis, but I feel like people don't necessarily add it to their plan because they think it's really just a it's normal to them. Let me open trading view to do my analysis. Let me make sure that my MT5 is fine. Let me check Forex Factory for the news for the day. However, I feel like it's very important to have all of your trading tools in your plan, so that you're not going to forget anything. Like sometimes I forget to check Forex Factory, but when I check my trading plan in the morning before I start trading, I know that I need to open, for instance, Magic Keys, which is my trading calculator, or I need to go into checking the news. I need to do all of these things and make sure that I've done everything according to what I have listed from important to least important in my trading rules or trading tools, really. So those are the elements. And I think once you have all of that, you can really quantify and you can put everything into a Excel sheet, into a journal, and you can start making changes when you reach a sample size. And I think lastly, the last thing that I have that's in my trading plan is my review process. And you need to be able to review your trades at the same point every sample size. So for me, that's 20 trades. After every 20 days, I do a review process and I go through, and the review process is quite detailed, what I need to look at and what I need to go through in order to get better for the next sample size, in order to add to my trading plan or take away from my trading plan. So those are all the elements. It's quite lengthy, but I think the more you
That was
have in your
beefy,
plan,
but it wasn't even
bro,
like the full answer, I feel. And I think because of time today, we're gonna have to cut it short there, bro.
we're
Because
gonna
I know
have
there
to
was
cut
also
it
a part
short.
two to the question. And I think this may be another separate video that we do because it's a very long question. And maybe I,
Yeah,
I shot both of us in the foot by asking you that question where it was supposed to be like a 10-minute answer, but you really can't. Or if you do, there's a lot of gaps that'll be in there.
exactly.
But I
Exactly.
think, guys, go watch this part of the video over and over again, because there's a lot of things that I took away from it that yeah, I think are going to add a lot of value to my own plan that I don't have in my plan. And I think you've actually broken it down like really well, bro. So yeah, no, shout out for that. Shout out for that.
Shout out, Chi. I think just to touch on that again, I think it's as long as you can quantify everything or most things, uh, then you can start making changes, or you'll know where to make changes because you have everything
Yeah,
written down. If you don't have everything
yeah,
written down, then it's gonna be something that you're just doing and you don't know where to make changes. Oh no, I saw this thing
sure,
yesterday, let me do it today. You know what I mean? But
sure.
then did it really
Yeah,
work last week? Did it work the week before? Did it just work yesterday? You know what I mean?
yeah.
But if you have everything quantified and written down and you have it journaled, then I think it's easier to make changes moving forward. So yeah, good question. I think it's too little time. That's a podcast that we need to jump on. But we'll do it one day for you guys.
So thanks for tuning into another episode of Modern Day Trader, guys. Um, as always, please like, subscribe. We appreciate the support. If there's any comments that you guys have or questions, drop them below, and we'll see you again next week. Peace.